depositors are safe in this case.
Yes.
I don't think we have any problem. In the depositors are safe, the employees are safe, so the vulnerable sections are all right. And in fact, investors are safe because they have been bailed out by the state. Looks like they have been bailed out by State Bank, and in fact, that's a moral hazard because investor capital, equity capital is risk capital, and you should not be bailing out risk capital. But this was it's a systemic risk. So you can understand why the government has taken this risk. I think now I'll answer your question, but the key point, which I don't know if anybody has mentioned so far, is that State Bank and Reserve Bank should come to some kind of agreement to make sure that the tier 1, tier 2 capital takes a haircut.
Right.
Now, the reality is that that's where, to bring this bank to health, everybody has to take a haircut, but particularly I think in this case you can justify because it is risk capital.
Right.
They risk the capital and they are the ones, they are institutions mostly, and I think if you do that and if you can sort of ring fence the toxic loans particularly, I think you can justify State Bank taking over and it becoming a healthy
Is that all right?
business.
Ring fence the bad loans and use somebody else's money essentially to save this bank. I'll come to you next. Yes.
So exactly, Mr. Das is right. This is risk capital that the investors of Yes Bank took the risk. But who is bailing them out? It is those who invested in the State Bank of India. And that includes millions of Indians who through mutual funds have invested in the State Bank of India or even directly. It's entirely defensible to bail out the depositors. But to use a bank just because it's owned by the state, majority owned by the state, to penalize the people who've invested in that bank, to bail out this bank, I think is wrong and should not be done.
Mr. Bhattacharya.
You see, I have been hearing a lot of singing of praise as if whatever has happened good, RBI has done good, central government has good, everybody is safe. What is shocking me is total insensitivity to the plight of a common depositor.
Yes.
And who is going to bail out?
Yes.
State Bank of India, milking cow. In India, in private sector, it's all privatize the profit in your pocket and nationalize the loss. And when you nationalize the loss, who takes the hit? State Bank of India's balance sheet takes a hit. LIC's balance sheet takes a hit. Why should the government not compensate State Bank of India and LIC? Why should it happen like that? State Bank of India is the largest national instrument for India's socio-economic development. India's growth rate is critically important and inextricably linked with the health of State Bank of India. I do not accept as to why the State Bank of India and LIC and all these massive assets of India, they are deliberately being weakened financially. This must stop.
So
at
Yes
some
Bank should be
stage.
allowed to collapse. So
You
Yes
see,
Bank should be allowed to
today's
collapse.
India's banking industry is 240 trillion rupees.
Yeah.
India's GDP is less than that. In the recent budget, 2020-21, the GDP has been estimated at 225 trillion.
Right.
People at the policy level, they are missing the enormity of the loss of confidence, and it will have a cascading effect.
Okay.
Yes Bank is a small bank in terms of India's macro scenario. But why should the government from its exchequer, if it is using State Bank of India to bail out, why should State Bank of India not be capitalized to the same extent?
Mr. Das,
Only
This
then
was
government
precisely
realized.
the point. I mean, he's making a very good point. In fact, the bigger risk here is that in future there will be distrust created against private banks.